Hi, thanks for joining me in today's video. This is David from Critical Trading. What we have in front of us is a chart of SPY. Now, SPY, which is the ETF that tracks the US stock market and is widely recognized as a benchmark for a stock market, has been going through some very tough times recently. We can see that since the beginning of 2022, which is marked by the vertical green line on my chart, the SPY has lost and is currently trading below its 50-day moving average, which is the blue line visible on my chart as well. We can see that the volatility of SPY is very, very high at the moment, and we can visually see that just by looking at the average size of the candlestick that's visible on my chart. The higher volatility is usually perceived as a bad thing, and it is true to some degree when it comes to long-only portfolios that hold the basket of securities for months or years. The increase in volatility is definitely a bad thing, and most trend following or long-only, longer hold systems are going to struggle in environments like these. However, increase in volatility can be also a good thing, and I'm going to show you how to capitalize on that in this video. Now, there are many ways that you can capitalize on higher volatility. You can trade the volatility itself via, for example, the VXX ETF or VIX futures. You can short the S&P futures as well, or you have other options available as well, which is to trade high frequency mean reversion systems in the stock market. The reason for this video is that I trade one of such systems myself, and that system actually had a very profitable day on 24th of February, which is this day here that I've just highlighted on my chart with the vertical green marker. And funny enough, this system is actually a long only system. So despite the overall stock market is falling, the S&P is below its moving average. There's a panic in the markets that was caused by latest geopolitical events in Eastern Europe. This system had a very profitable day anyway. And let me just show you what I mean with some actual numbers. So we're looking at the account statement of one of my accounts, specifically a portfolio that I trade, and I trade this mean reversion system that I'm talking about here in this particular portfolio. And this is the account statement for 24th of Feb 2022. And we can see that the portfolio made 5.15% on this single day. And the reason I'm showing this to you is that this long only mean reversion system actually contributed towards this. Actually, it was just this system pretty much on its own generating this entire return. The other systems that I have in this portfolio, in this account, didn't do extraordinarily well, despite all of them had an up day. But having said that, this system contributed heavily towards this profit number. One of the positions that it had is in this ticker here, DOCN. I think this company is called DocuSign, which is a tech company. And this is the actual trade that this system made. We can see that it entered here close to the low of the day, and it closed the positions at close, so it doesn't hold any positions overnight. Now, as far as the actual rules of the system are concerned, I've already shared this in one of my previous videos, so I'm not going to go over that again here. I will put the link to that video in the description of this video, so make sure to watch that. I've covered that in quite a bit of detail in that video. But basically, this is a long only mean reversion system, and the point I'm trying to make here is that despite the overall stock market is falling, this system actually has one of its best periods as far as the performance is concerned, and that can be seen clearly on these equity curves here. The green equity curve belongs to the system I'm talking about here, whereas the orange/yellow equity curve is the SPY. And we can see that since 2022, if I just zoom in a little bit, and we can see that the SPY kept falling since the start of 2022, whereas this long long-only mean reversion system has got a very solid performance, a very, very good period. And the best thing about it is that because this is a systematic strategy, that means that you can write it in the form of a code. This equity should pretty much be very, very consistent with the reality. So like I said, have a look at the previous video I made before, link in the description for some basic rules of this system. Also, I will be launching a Signal subscription very soon. I will keep you posted. I'll be announcing it in one of my later videos. And the Signal subscription will include all signals from my own portfolio, including this particular system, so stay tuned for that. Another way you can profit from increased volatility in the stock markets is by trading the volatility itself, and you can do so in quite a few different ways. I guess the easiest way is to buy the VXX ETF. Now, VXX ETF is an ETF that tracks volatility, and one of its characteristics is that it's negatively correlated to the stock market, so for example the SPY, and we can see that relationship quite clearly on my chart here. I've got the same chart like I had before, which is the SPY ETF, represented by the candlestick chart in the top section of my screen, and in the bottom section, plotted in a green line, is a closing price of the VXX, which is the volatility ETF. And we can see that when the volatility spikes, the stock price or the stock market goes down, and vice versa. So we can see, for example, again, start of 2022, which is what I've just marked with the vertical green marker. We can see that the SPY started to fall, got below its 50-day moving average, and we can see that the green line below my chart, which is the VXX, kept rising. So a common strategy is to basically buy the VXX when it gets above a certain moving average or a certain standard deviation of its closing price. Again, I'm not going to go through an actual strategy here because I shared the strategy on VXX before. Again, I will put the link in the description of this video. I shared some of the rules, including the backtest results of a strategy like this, so make sure to check that video out. And another approach that you can use to capitalize on the increased volatility in the stock market is to trade the index futures such as E-mini Nasdaq or E-mini S&P on an intraday basis using what's called an opening range breakout type of strategy. Now, these strategies are commonly known in, let's say, a more professional trading world. So these type of strategies are not very well known among complete beginners, but they can be very, very powerful. I've got a chart of E-mini Nasdaq 100 futures market showing on my screen at the moment. And for example, a strategy like this would be basically buying on days like this one, for example, or this one, and here as well. Again, I shared a strategy like this before in one of my latest videos. So again, I will put the link in the description of this video. I'm not going to go over the details again. But again, the point I'm trying to make is that this kind of strategy works very well during the times of increased volatility and can therefore act as a hedge for long-only, longer-term hold portfolios. So overall, the increased volatility is not a bad thing necessarily. It's just about how can you capitalize on that. And the good thing about systematic strategies is that you can code them, and then you can potentially have a script that trades them for you. So for example, I have a script that I wrote in Python, which is a very, very popular programming language that essentially trades this kind of a strategy. So opening range breakout in E-mini Nasdaq for me during the day. So I don't have to be looking at the charts myself. And so this approach is highly scalable as well. If you're interested, I'll be soon launching a new course as well, in which I will basically code a strategy like this in Python and then share the final script with you so you can take it away and start trading it and build your own strategies as well. So stay tuned for that. Thank you very much for watching. I hope that you managed to take away something valuable for your own trading from this video. If you're looking for more, subscribe to my channel. That will help me out a lot and will also help other people to discover my videos and potentially learn from them as well. Thanks for watching. David at Critical Trading, signing out.